So China is dumping all of its US treasuries and investing heavily in gold. Look at silver also will continue rising. Let's look at what exactly is going on regarding US treasuries and bonds. Well, globally there is a fall as far as US bonds are concerned in confidence. So traders and investors are looking to invest elsewhere. What is the problem with US treasuries and what's the problem globally with Japanese bonds and other bonds in Germany, UK and Australia and in the Western world? It's quite simple. When an investor invests in a US Treasury, they expect it to be safe, secure, and have confidence that they're going to get paid out the interest rate and obviously the return on capital at the end of that particular term. However, since 1933, when FDR decoupled gold from US Treasuries, in 1971, when Nixon decoupled the dollar from the gold standard, those are two events that could be deemed as a default. What's happening now, because of government spending and the increased allowance of $4 trillion being put on the debt ceiling by Congress, there is a concern that the US will not be able to honor its pledges and honor its commitments. In other words, the revenue coming into the US economy is not sufficient to comfortably pay the interest that's going to be applied to those particular bonds. In addition to that, those bonds, there's around about $7.5 trillion worth of bonds that need to be rolled over this year in order to refinance the US government. And those bonds were at around about 1 to 1.5%, are now going to be charged out at 4.5 to 5%, in order that investors and traders will have the appetite to take those particular bonds on board. So yields are rising because people don't want the bonds. China, Japan, Saudi Arabia and other investors are selling the bonds or are not buying the bonds. There's only about a 75% take up. Who is buying the rest of the bonds? Wait for it. US Treasury. The US Treasury is buying the surplus of those bonds, calling it normalization. Well, that's not normalization. That is abnormal. Why would the US Treasury buy its own bonds? And where is the money coming from? Quite simple. They are going to be printing it. So it's going to be called light quantitative easing. That's what the term is on the street, light quantitative easing, which means that they are producing and printing money that they don't have in order to balance out the bond market and make out as though it's strong. But the bond market is not strong, and that's going to push gold and silver much higher. So lack of confidence in the bond market will feed through to a property crash, and the Chinese and other investors leaving the bond market is a big warning sign.